Hello everyone, this is Drew from Best of Us Investors working with Mark on the Platinum Trading platform. As you may know, if you have been a subscriber on the channel for some time now, Mark, who has been successfully investing for over 40 years and warned us to get out of the market in 2021 November when the market was at its peak, is now helping our subscribers on swing trades, analyzing more than 1,000 companies each week based on 10 indicators, and sharing the tickers of the stocks that are set up for good uptrends every day, along with weekly Zoom calls for Q&As with the members. So if you might be interested in our service, please make sure you check the link in the description below. So today I want to share great insights from Mark on two stocks that are the hottest in the market these days, NVDA and Tesla. Now, buying a stock is one thing, but knowing the potential selling level or price is as important as well. And to be able to find a price to sell at a proper time, it cannot be done without reading the charts. Now, in this week's Platinum Zoom call, Mark went over Tesla and NVIDIA and shared his insights on the levels or prices he would have been buying and selling in order to obtain the most profits utilizing the volatility of these two stocks. Now again, as we always mention, this is never financial advice, and all we are doing is sharing the research and chart analysis that Mark has done so that our members can make better decisions. So with that, let's get into our first stock, NVIDIA, which is being talked the most these days in the market.
Here's what I was talking about, and I put it in the Discord yesterday, talking about there's going to be a lot of FOMO excitement about NVIDIA, and so utilize your limit orders. Don't buy into the hype and try to get a sale. And I'll show you what but here, this is the minute chart yesterday on NVIDIA. And you can see we started right here. That was open. And then boom, well, where was open? We were 471, somewhere there. Went all the way up over $500. Everyone had their orders in, probably, market orders and limit orders high. And, everyone didn't want to miss out. And within the first couple minutes, you can see it drop right back down, and then a little more euphoria, and drop back down, and a little more euphoria, buy the dip, went sideways, drop back down, buy the dip, drop back down, buy the dip. Then we started a slow, move upward, got back up. People are getting, oh, well, maybe I shouldn't have got out. Maybe I should stay in. Up, dip, do a little buy, dip. Well, we ended up here, 47 cents above where it closed the day before, right before earnings. That's interesting to me. And that's the FOMO going on in the market. And I was thinking NVIDIA, and not that it's a bad company. I mean, obviously their earnings and everything's going nuts, but one company is going to save the whole market or make the market go up for the rest of the year. And I know we've done it this year with, the NASDAQ and the S&P with, magnificent 9 or 7 or whatever they are, pulling most of the market up. But one company had all this hype on it. And then you can see what happened with NVIDIA.
So as we just saw, investors that do not know how to read the charts would FOMO into the stock that have great hypes like NVIDIA, hoping that the stock would go higher, even though the charts are obviously showing that the stock is overpriced. Also, investors that are buying at these prices are the ones that mostly sell with a loss or are stuck in the stocks when there's a pullback, as we saw in NVIDIA last week. Now, the beauty of chart analysis is that you can find a great level to buy in or sell, and once you determine that price, you will definitely have less FOMO and will not be worried about your entry levels that much and can sleep well at night. Chart analysis is not 100% accurate, but it is certainly a very, very helpful tool to have when swing trading and also when finding an entry point for long-term investments as well. With that, let's see what Mark shared on Tesla.
This is a year chart. And you had a nice run on Tesla. And as a swing trader, you would have got in. Well, you could have got in if you were under the 200 and you like to trade. And we have it under the 200 list, which is highly risky. But let's just say you waited and you followed the rules. You got in right about here. And that's at 203. And you followed it all the way up. And then you probably got out here. Okay. And that's at 256. So you're up $53. You missed out on this loss here, and it got you back in up here, right about here. Okay, that's 261. You didn't know if this was going to fall more or not. So it got you back in, and then all of a sudden you popped up, and you would have got out before earnings at 293. So there was another 30-some dollars. And you would have been out, missing all this downtrodden here until you got back in right about in here at 233 in this area. So it's about missing this part right here, catching this part right here. So is this going to go up? I don't know. We got almost across to the MACD. It's not there yet. We got a nice crossover of the stochastic. We still have an RSI that's kind of, low. So I don't like the 9 going down that way. I want to see the 9 going up this way. I don't like the 20 going down, the short-term guys. We're seeing a rollover of the 50, okay? And, we'll just see how this plays out. Would I be in this, swinging back in at this point? No. But so. You're right. If you're a long-term person and you don't have the time or the desire, because you have to have both to kind of do this. I mean, again, if you would have gotten in back here, okay, this is September of 22, so about a year ago at 373, and you stayed in for a year, you're at 235 now. That's called lost opportunity cost over a year. The way I look at
Mhm.
it, and this is just me, I would have gotten out at that point. I would have missed most all of this, got back in here, gained some of it back, got out, stayed out, got back in here, and gain that back. This in here, this period here, let's just say we're in the period now. I might have just stuck that money in a 30-day treasury making 5%, let's say back at that time, and being happy and just waiting until I get to this point and then pull it out and pull it out and do the same thing. So that's really swing trading is about getting out on and missing the downs, not just letting your money sit, but putting it somewhere where it works. Now it's perfect because we have a better, market for fixed income than we had for the last, 15 years. So there is a place to put it. So you're not making as much money, but it's safe money. And then when you get back in, you're making money. So you're missing this part, you're gaining this part, missing this part, gaining this part, missing this part. That's how I see it. But you do need time to do it. You do need to educate yourself on it. You're not going to hit the highs and the lows. That's not what we're about. We're about bunts and singles and doubles. Well, we're not doing 10x, 8x, 100x on this. It's just methodically trying to utilize the same information that the big guys use on a much bigger scale to help us improve the probability of success in our accounts.
As we just saw, holding a stock for the long run can be a great strategy for some people if they might be thinking 5 to 10 years ahead and have the confidence that this company will have a higher value in that 5 or 10 year later period. However, as Mark was saying, if you would have just followed the charts and got in and out following the guidelines, you would have been making money, preventing yourself from the huge downtrends and getting on the train as the momentum switched to an uptrend. Of course, we will not be aiming to get on and off at the bottom and the top, but we would have been able to prevent the big downtrend, preserving our gains, and get on the uptrend up to a certain percentage, also preserving some gains as well. Now, swing trading is not about making home runs, but making sure you ride the trend up and get out when the trend goes down and keep preserving the gains on the way. And that is what we are helping our members in the Platinum service. So with that, if you're interested in these swing trade updates, daily ticker suggestions, educational content, and live Q&A with Mark on a weekly basis, make sure you join our Platinum member in the description below so that we can make it through this tough market together. Thank you very much for watching and looking forward to seeing you all on our Platinum service Zoom calls.